Raise your hand if you've ever had the dream or desire to use your RSUs or bonuses to invest in real estate to create cash flow and legacy wealth. Did you do it? If you're like most busy professionals, and especially if you're a busy tech professional, I'm guessing the answer is no. Well, I'm here to tell you it's not your fault. The hard truth is that when people say real estate investment, they really mean real estate business. Investing in real estate in traditional ways basically becomes a second risky job. And who has time or energy for that? But wouldn't it be great if you could just pick and choose a rental property to buy just like a stock? Just open up your email, see lots of properties for sale, and just point to one and say, the numbers work. It's in a good area. I'll take that one. And then it's yours. Well, stick around because I'm going to share how you can flip the script and make real estate investing look exactly like that. I'm Jim Bevins, a 30-year engineering veteran that pivoted my retirement to real estate. And I built a portfolio of rental properties that now cash flows thousands per month. And I'm here to share how I did it and how you can too. So I'm not going to talk today about why real estate is such an attractive investment. At least not today. Stick around for future videos for that. No, I'm going to start today by talking to the folks out there that already know how great real estate can be as an investment. The cash flow, the appreciation, the leverage, the tax savings, all of it. Maybe you read Robert Kiyosaki and it opened your eyes like it did me so many years ago. Maybe you're tired of letting your RSUs ride on the stock market roller coaster. Maybe you already own rental properties in your home country and you want to learn how to do the same here in the US. And by the way, if you're an immigrant from India who now lives in the US, maybe working a tech career here in America, and you want to start a real estate portfolio here in the US, definitely stick around. I've come to learn how much more common real estate investing is in India among the general populace compared to here in America. And I've taught a lot of people from India how to do what I'm going to share with you today. So definitely stick around if that's you. But whatever the reason, you know you want to own real estate, but there's just too many roadblocks and challenges in front of you. Let's talk about a few of them, okay? The first real major challenge, it's the biggest one, and that is the sky-high prices, right? Property values are so high that they just couldn't even begin to cover the rent if you were to get a mortgage, right? If you live in the Bay Area, you'd probably spend like $1 million for a 2-bedroom condo, right? And, the rent would only cover just a fraction of the mortgage payment on that. That's kind of an extreme example, but it is very similar in other coastal states, Washington, Oregon, New York, and lots of other places around the country as well. So that's the first major pain point, right? The second problem is the tax structure, high taxes. That's another thing that kind of ends up disqualifying a lot of states in where you live. So not only is your mortgage payment sky high, but now you add in the taxes and insurance, and then it's like, it just doesn't make sense, right? The numbers don't make sense. The third major problem is the very high regulation, specifically the landlord-tenant laws that are skewed heavily towards the tenant. Again, this is primarily in the coastal states, California, Oregon, Washington. I mean, I've heard horror stories of landlords in California that, a tenant moves in and then they just stop paying. And it takes them a year or more, in extreme cases, even a couple years to get the tenant out and get a new paying tenant in. And just, banging their head against the wall as the tenant continues to just kind of use every lifeline in the system to, extend the whole process. And that just causes a huge problem because, real estate can be risky enough, but then to deal with this added pressure of, if you get the tenant wrong, that they could make your life a miserable hell, right? So those are really the three big issues with investing in real estate, especially around wherever you live, right? Well, I mean, the good news is that, there are methods to get around some of these issues, especially that price issue. And so let's go over some of those, okay? The first most popular way to invest in a way that mitigates, the financials not working, is to do a rehab, right? You buy a crappy house for much, much less than it will be worth after you fix it up. And so this allows you to get in for a very small amount, and even after adding costs for repairs, then you're probably in for a low enough amount that if you get a mortgage from that you'll probably be close to cash flowing. Hopefully you're at least breaking even. And this is the most common solution that people have is, I'm just going to go buy a house that needs work and I'm going to go fix it up. And this is what is very popular on sites like BiggerPockets, right? And it's great, but not so much for those of us with demanding careers. I mean, it's like running a business, right? It's like you got to hire all the people, the contractors, and, take bids. And it's a very active investment. And that's the problem here, is that working in these busy professions like we do, yes, we have lots of resources in terms of money, RSUs, bonuses, stock compensation, but we don't have the time, right? So that's the first way that we can get around this price issue, but it just doesn't really work for a busy professional. The second solution to this is to look for creative deals, right? Creative financing. Buy a house on a lease option, or buy a house on a subject to the existing mortgage, if you're familiar with that whole terminology. Look for seller financing, right? A seller who says, oh, I just need, 50 grand and I'll carry the rest, or I'll carry a second mortgage or something, and they'll take it in payments. And then, and then you might be able to turn around and flip it, or, do something with it. But if a seller's willing to negotiate, then you can sometimes find a way to make things work. The problem is finding sellers like that, okay? Because, 95% of your sellers out there, they just want to hire a realtor, put it up for sale, and just get cash. And so it's up to the buyer to get the loan and make everything work. So that means you've got to look for motivated sellers, right? You got to look for sellers that are, they're facing divorce, they're facing job loss, they've got to sell quick. Their house is a problem and they need to unload it. And, if you can find people like that and offer them a solution, it can be very lucrative. But the challenge is finding people like that. That requires a marketing campaign, right? That requires sending out postcards and doing robocalls. And, it's running a business. It's running a marketing business. And again, for people like me that are in a busy career, and we just don't have time for this. I've tried to do that for a while. I actually did. I went out and looked for motivated sellers and pounded the pavement a little bit, and it just didn't work. It's just not workable. The third solution that people do to work around this is to put down a massive down payment on a property. And, the idea is that instead of just putting down the 20% minimum that we need to get into an investment property, that results in a mortgage payment that's too high. So to lower the mortgage payment and make it cash flow, we put more down. We put 30% down, 40% down, 50% down, maybe even 60% down in some cases. Combined with the fact that these are in high price areas, you're looking at this $600,000 home, and now you've got to put $200,000, $300,000 down just to make the numbers work. Even if you have that capital, then it makes it so that it's all tied up into one property. And that's problematic for several reasons. For one thing, it makes it very risky because all your eggs are in this one basket, right? You live or die by this one property. And so you put a tenant in it, and that better be a damn good tenant or you're hosed, right? And not only that, but it's probably not going to move the needle very much. Just this one house, right? Maybe you're making a few $100 a month of cash flow, or maybe 10 years from now, you're making $1,000 a month. Okay, $1,000 a month, that's great, but is that going to really make a difference in your, financial well-being? So yeah, there's multiple problems with that. So the fourth solution isn't really much of a solution, but it is an option, and it's something that some people do, and that is just live with the negative cash flow. Just say, you know what, I'm putting my 20% down, and it's going to cost me X amount of dollars per month, and that I just consider that part of my investment. I'm just feeding my investment into the property month after month. And, this, I shouldn't have to tell you, this is fraught with risks, right? You don't know what's going to happen. And the most important thing about owning a rental property that can save your butt if something bad happens is if the property cash flows. Because if the property's cash flowing, it doesn't matter what the market does. In 2008, values plummeted, right? But the people that were able to hold on are doing just fine today. And that's the key, is you need to make sure that you can hold on. And the way to ensure you can hold on is to have positive cash flow. If you're buying a property with negative cash flow and you're just feeding the meter, then all you're doing is you're just hoping and praying that it's going to appreciate. And someday you'll sell it for more than you bought it for. And that's not investing, that's just speculating. It's kind of gambling, right? So that's another option that some people utilize, but it's just not attractive. It's not a good option for us. Okay, a fifth option that some people are taking up, in fact, more and more people are taking this up, is to buy a property and rent it out as an Airbnb. Now, what that'll do is that'll jack up the potential rental income. And make no mistake, Airbnbs can be very profitable, especially if it's in a good area. You know all the things about what makes a good Airbnb. But even so, it's, getting that nightly rate can really jack up that rental income. The problem with that, there's several problems. Number one is that, again, it comes down to time and energy, right? Unless you want to crater your cash flow by spending about 30 to 35% of your income on management, because that's what a professional Airbnb property manager will charge you, is about 35% of the income. So that jacked up income is suddenly going to be a lot less if you're paying somebody else to take care of it. If you do it yourself, now you are self-managing it, and you are making sure that the cleaning crew's there, and you're answering tenants' issues when a new tenant comes in every 5 days, and they need something. So again, it becomes an active investment. You are putting time into it. And again, we don't have time for that. Not if we're working a busy job. Right? The other part of Airbnb that makes it not as attractive, at least in my mind, this is kind of my own personal opinion and preference, is that Airbnb, short-term rentals do carry a higher risk than long-term rentals. That's because with the long-term rental, if somebody is renting a house to live in, look, people will always need a place to live, right? That they will always need a place to live. So you have that kind of foundational demand. Whereas with a short-term rental, if the economy ever turns south, if we ever go into a recession, people's disposable income is going away, these Airbnbs and these short-term rentals, that's going to be one of the first aspects of the economy to suffer, right? That's going to be money that people don't have anymore. And so that's to me, it's a higher risk investment to manage an Airbnb than it is a long-term rental. Now, that's my personal take. Some people have done very, very well with short-term rentals, and it is an awesome investment. But again, looking through the lens of how can I invest my money in a way that will get me good returns, but not suck my time and energy away from the things that are important, like my career and my family. That's the challenge. And Airbnbs still don't really meet that challenge, right? Okay, so the sixth way that people can work around these issues of real estate being very difficult to make work on our local market is to do various house hacking techniques. The most common way is you live in your house for a while, and now it's time to move. And so you buy a new house, and instead of selling your house, you rent out your old one, right? This is fairly common. A lot of people will do this if they have the money to put a down payment on a new house and they don't need to sell their other one. So this is probably the most workable solution. This is what probably works the best in terms of making the numbers work. That's because by the time you live in a property for a few years, your mortgage payment is fixed. And that's the beauty of rental homes, single family homes, is that you can get a 30-year mortgage, basically set it and forget it. And so that mortgage payment is fixed. And now if you live there for 3 or 4 or 5 years or more, then over time, the rents will keep going up with inflation, but your mortgage payment stays fixed. And so by the time you move, say 5 years later, you can look and say, oh, I can rent my house for like $3,000 a month. And look at this, my mortgage payment is $2,500. Sweet, I can rent it out. So that works. The big problem there, in case you haven't guessed, is that, again, you can't scale. You can't build a portfolio that way, right? Nobody's going to want to move into a new house every year. Now, granted, some people do. There's like house hacking, gurus and teachers out there that talk about how to do this and, move into a house, fix it up, and then go move into another one. But again, just that activity and what's practical for somebody that's trying to build up a career and start a family and do all the things that we want to do outside of our investments. So it comes back to our investment shouldn't run our life, right? So it is a solution, but it just doesn't let you scale, right? And again, you do that for one property, and it's probably not going to move the needle. Maybe 5 years later you do it for a second property. It just doesn't really move the needle. So the main problem that all of these solutions have is that they take time, right? And that is the one resource that busy professionals like me and you don't have, right? We've got the money resources, we got the capital. If you are making 6 figures, if you're making multiple 6 figures, you've got stock compensation, you've got bonuses, then, you've got money ready to go, but you don't have the time. And that's what all real estate investing methodologies require. Unless, again, you're going to put like 50% down, which, again, it's just not going to move the needle. That's the only solution. But then it's like, why is it even worth it? Right? And I realize too, there are things like REITs or real estate funds or syndications where, you can put your, basically a pool of people come together and then somebody is going to invest your money for you in real estate. The main issue there is that, that's not really the same asset class, because at the end of the day, you're still giving your money to somebody else and they are in control of it. You have no control. And a lot of them, the way they make it work is that the returns end up being not as much, because the people running the show are a lot of times getting a lot of the profit. And then all the group of people that put their money into it to form the fund or, whatever is being used to buy property, they're usually kind of getting what's left over. And so the results tend to be not as good. And there's other issues, like a lot of these funds and REITs, they will not get very much leverage. In other words, they will put like 70 or 80% down, and just the actual bank loans are only like 20 or 30%. And so that reduces the leverage, and it just makes the returns much more normal, right? It's like you could buy a stock or you could buy a REIT and they'll probably have very similar returns. So I just acknowledge that there are solutions like that, but I just consider them kind of different asset classes, because I really want to talk to that desire of actually owning rental property, where you have all the control, you are getting all of the cash flow, you get all the leverage, all the appreciation, all the tax benefits. That's another thing that some of those REITs won't give you. So so that's really what we're talking about here. Okay, so now that I've reminded you of all the ways that real estate investing doesn't work, what if I told you that there's a way to invest in real estate properties, actual real estate properties, that give you all the benefits of real estate and wealth building? The cash flow, the appreciation, the leverage, the tax savings. And you can get that all by simply sending an email that says, I'll buy that one. And within 30 to 60 days, you'll receive a freshly rehabbed property completely in your name, with professional property management in place and a tenant already occupying it and paying rent. Well, that is now possible in today's real estate market. And it's done through a relatively new investing methodology that sprang up in the wake of the 2008 financial crisis. It's called the Turnkey investing model, and it's a complete game changer for busy tech professionals who have the financial resources like RSUs and bonuses and high salaries to invest in real estate, but not the time to do any of those traditional strategies that we just talked about. It allows you to invest in cash flowing properties in affordable markets as a truly passive activity for as little as $35,000 to $40,000 down. And this is done by plugging into the same investment infrastructure that Wall Street hedge funds built up in the wake of the 2008 financial crisis, when they entered the residential real estate market after it cratered. So you've seen headlines, I'm sure, about Wall Street and corporations buying up homes and buying rental properties and, buying up houses, right? Well, let me ask you, how do you think they're doing that? Do you think they are using any of those strategies that we just talked about? So do you think there's a guy on Wall Street sitting in his suit and tie, sitting at his desk, perusing the MLS, getting on the phone and making offers, taking applications for tenants, or taking a phone call at all hours for when a sink clogs up? No, of course not. They're not doing that. And yet, they're buying lots of houses. How are they doing that? Well, they utilize systems and infrastructure that makes it easy to buy and manage remote rental properties in other states at scale. These are systems that have been built up over the last 10 years, and it's never been easier for individual investors like you and me to plug into this infrastructure and get access to the same cash flowing properties that they do. And I should know, because I use this investing methodology to personally buy 6 properties in 3 different states that now cash flow thousands per month after fixed expenses, and has seen a combined equity growth of over 80% in just the last 3 years. So if you want to know how to do this too, if you want to stop banging your head against the wall as you try to break into the real estate game or try to grow your minuscule portfolio, then watch my next video. Because that's where I'm going to do a deep dive into this investing methodology that lets you buy affordable properties with immediate cash flow and do it without sacrificing time or energy from a demanding career. I'll see you there.